With Homes Mortgage Lending, and this video is intended for my clients who I've recently pre-approved to give you an idea of what to expect during the home search process from me, your lender. I do also have a video in case you are interested to see more in depth on the actual loan process and how that process goes, which I will link in the video description. So once you're pre-approved with me, there's going to be three main things which you should have already seen in the email with the pre-approval attached that you're going to want to keep an eye on, to basically things to avoid. So I'll briefly touch on those because they're very important, but please let me know if you have any questions on those. So number one, please don't have your credit pulled if at all possible, and please don't open any new lines of credit, anything on credit. Don't go buy a new car or anything like that, as that can affect your pre-approval status and your what you qualify for and the rate that you'll get. Number two, keep your job. Don't make any job changes while you're searching for your home. If something comes up, life happens, let me know, but we want to make sure that your employment qualifies, and if there is a job change, we certainly want to know about that right away. And number three, please keep your bank statements and asset statements as clean as possible, meaning avoiding any large deposits, avoiding moving money around, because that can cause some questions from underwriting and can cause issues when your loan is in process. So again, any questions on any of those three things, please let me know right away so we can discuss them. So once you are pre-approved and you're starting your home search, you probably already received a hypothetical fee worksheet from me. If not, I will be sending you one shortly, but I like to make sure that you have a good idea in your price range what your payment and out of pocket will be, so that you know it's comfortable for you. So I'm going to talk in a little bit of detail on those fee worksheets here, so you know what they look like, what different items are on there, and what to expect while you're searching for your home as far as getting updated pricing, because I find one of the most important things during the home search is to make sure that the payment and the out of pocket is comfortable for you before you make an offer on a home. So let's take a look. I have put together a couple quick hypothetical fee worksheets today. So this first one, they're actually very similar, but I want to show you one key difference. But the first one is just a $400,000 purchase with $100,000 down, which is 25%. This top section here that's highlighted is going to be the pertinent loan information, as well as the interest rate and the APR. And then below this is you're gonna have your fees. So your down payment here plus these fees is going to come to your total estimated out of pocket. One key thing, so you'll see that there's a lot of different fee breakdowns. So I'll briefly touch on these. Origination charges, meaning if there is any points or any costs from me, the lender, for your loan would be appearing here. Sometimes I do put the third-party processing fee there because it is something that will vary from lender to lender, but it is actually a third-party processing fee with myself, meaning it's not my in-house cost. So it's not a true origination charge. But other than that, everything else is true third-party costs, meaning doesn't really matter what lender you go with. These are all going to be very, very similar, if not exactly the same. So we have some recording fees. We have some money to set up your escrow account, meaning prepaids. This will be a little different if you don't have an escrow account set up, and depending on where you live. So in Southeast Michigan, typically you're going to have 1 year property taxes for your escrow setup plus tax prorations due back to the seller. So for me, I just lump these together. So your tax prorations and your money to set up your escrow account are in that prepaid item. Homeowners insurance, you do need 1 year's homeowners insurance premium paid up front. So just an estimate of what the homeowners insurance for now. You'll get to shop for that once your offer is accepted. And then prepaid interest, so just the odd days between when you close on the loan and the first of the following month, you'll pay interest per day based on your loan size. And then there's some initial escrow payments, which are just reserves that we set up for the escrow account. So if you're not setting up an escrow account, you won't have these. But typically 2 months worth of 2 months worth of property taxes and 3 months worth of homeowners insurance, just to give a little cushion in your escrow account. And then you'll have title work in Michigan. You can shop for your title company. You can use whoever you want. Typically, real estate agents will tell you which title company they like to use, and that's who most people use, because most people don't have a good idea of different title companies in the area. And in my experience, most title companies' charges are very similar from one to the next. So that's what most people do, but by all means, if you know a title company or you want to shop for title insurance, you certainly can, and I can certainly give you some recommendations on a few good ones if you'd like. But the price on your end is going to be usually about the same. So usually you're shopping based on quality over price, because the price will be pretty close. And then usually most real estate agents will have some sort of a realtor admin fee, doc prep fee, something like that. The sellers in Michigan, almost always, unless it's negotiated otherwise, 99.99% of the time, the seller is going to pay both real estate agents commissions. But your real estate agent will still have some clerical costs, so they put them in here. It's usually somewhere between $200 to $600 is what we usually see. So your down payment plus all those items added together is going to be the total estimated funds from you. This is not going to include any inspection because most loans do not require an inspection from the lender. So that's something that you pay out of pocket. So just one other cost to keep in mind that you want to add on to what your total costs are going to be. And then we'll show your total payment in this next column, which is going to be principal and interest, which is first mortgage. Hazard insurance and homeowners insurance are the same thing, so those are interchangeable, but so your monthly homeowners insurance, and then monthly property tax added together. So that'll give you your total payment amount. So what I want to show you on this next payment, this is what's going to, that would be more of the hypothetical worksheet that you received from me. When you're actually having me price out specific homes that you're considering, it'll look very similar, but the one difference is going to be at the bottom on the right column for that monthly payment. There's going to be a property tax increase estimate. So in Michigan, almost any home that you look at, the property taxes will increase 6 months to a year after the home is sold, because the home is going to be reassessed and there's caps in place for the current owner that will come off. So your property taxes will almost always go up. I'm not going to go into a ton of detail on how that works. I did a whole video on it that I will also include in the video description in case you're curious on how that works. But I'm always going to give you an estimate on what I think those taxes are going to increase by on a monthly basis and add that to the total monthly payment. So when you look at my worksheets, you're going to see the total monthly payment. That's what your payment will start at. When you close on the loan and sign on the dotted line, that's where your payments will be from day one, or at least the estimate of the payment at this point, because your loan hasn't gotten into process. But then they'll increase typically about a year after you buy the home once those property taxes go up. So the property tax increase can vary quite a bit from area to area. So I want you to make sure that if the home looks good and the total payment looks good based on the current property taxes, but taxes are going to go up $3,600 a year, which is $300 a month, that you're planning on that, and that new payment will also fit into your budget, which is why I always do that. So the only other thing I want to mention is on the couple worksheets I did, I just assumed they're single family homes without homeowners association dues. If you're looking at condos or even a lot of single family homes, especially newer built single family homes, have association dues. There are some additional costs on that. We'll put the homeowners association dues on a monthly basis and the total estimated housing payment. You will pay those out of pocket though. They won't actually be included in your mortgage, but they're put in there just to give you the full picture of the monthly payment. Plus they they do have to be included on your loan application for qualification. We qualify you based on the total payment, including the association dues. Sometimes there are some additional costs with homeowners associations. There's sometimes cost to review the association to make sure that we can lend based on their policies, typically more for a condo. So we'll have that cost in there, as well as sometimes there's some cost to get added to the association. And then oftentimes homeowners associations will make you pay the first month's or the first 2 months worth of homeowners association dues at closing. So we'll add those in there as well. So that's the gist of the fee worksheets. If you have any questions on any of the costs on the fee worksheets, how they're structured, anything at all to do with how they work and how they break down, please let me know. What I encourage you to do while you're during your home search is any home that you're considering, have me price out. If you're thinking about making an offer on it, have me price out a fee worksheet, because I'll pull the property taxes, so it'll be much more accurate than the hypothetical numbers. Interest rates change every single day with myself and with every lender. So just as a side note, if my rate looks higher than it did a week ago, so do other lenders, and 99.99% of the time. Usually I don't get beat by other lenders on pricing. But if the market goes up, it goes up for everybody. But you want to make sure that you're looking at current interest rates, the property taxes for that home with that property tax increase estimate, and of course the price of that home that you're making the offer on. What I encourage you to do, I think a best practice would be as you start your home search, the first 2 or 3 homes that you're looking at, have me price them out so you get an idea of how things look on the fee worksheet. Usually when you're thinking about an actual home, an actual payment you might be making, that's when some questions will pop up. So more to familiarize yourself with the fee worksheets and to get a good idea of what the payment is in your price range, have me run the first 2-3 homes. And then from there, during the home search, I would encourage you to have me price out any home that you're seriously considering. Different borrowers, different buyers, in my experience, have different comfort levels. Some like me to price out almost every home they're thinking about, some, just a few, and everywhere in between. So either case is fine. What I would encourage you not to do is if you're looking at a ton of homes, on Friday, or 5 homes or 10 homes over the weekend, don't send all of them to me. I probably won't price all of them out, because it does take me 10 to 20 minutes to price out each home, and I've got other clients I'm pre-approving, other clients whose loans are in process we're working on, and other clients whose homes I'm pricing out. So it's just it can be too time consuming if we're pricing out that many homes. So if you are in that boat where you have a bunch of homes you're looking at and you really want to see some pricing on them, what I would encourage you to do is send me the home that you are most interested in, and also send me the home that's the highest price of the ones that you're considering, and we'll run the numbers on those to make sure that they're within the ballpark. The one caveat that I will put on that is if you have a home search that you're looking at homes in a lot of different areas that are far away from each other, I often will make an exception to price out some homes that just for the sake of, if you don't know that you're going to make an offer on a home if the payment's too high or the out-of-pocket's too high, then talk to me first, but we can price out a few more homes just to make sure that you're not spending all of your time and gas money looking at homes that you never would have made an offer on either way. And your realtor will be happy if you look at a home and go, yeah, it's great, and then you look at the numbers and you say no chance, and they drove an hour away. They won't be super happy from that front. So lastly, during the home search, when you get to the point where you go, yep, this is the home, we looked at the numbers, they make sense, and you want to make an offer, please let me know. We definitely want to get you a fee worksheet on that home just to make sure you're good to go when you make your offer. And also, if you're putting 20% or more down, we'll check for an appraisal waiver at that point. About 30% of folks get lucky when they're making an offer with 20% or more down, and they don't need to get an appraisal on a conventional loan. So if we get an appraisal waiver, that's a negotiation piece that will help us out. We'll want to let the listing side know because it gives us a little bit of a leg up. So we'll always check for that if you're putting 20% or more down. And then let me know, and I'll talk with your realtor as well when you put the offer in, because they'll likely want me to do an updated pre-approval letter, mostly just to show that you're actively working with your lender, the date on it will be current, and the price that you're offering will match the pre-approved letter. Sometimes there's some different strategies that your realtor may have with the amount on the pre-approval letter, but regardless, having that updated is something that they usually want, so we'll talk with them. And then also, I'm always more than happy to contact the listing agent when you put the offer in, because I'm very thorough up front when I pre-approve you, so letting them know that we looked at all of your documents to pre-approve you, all your pay stubs, bank statements, W-2s, is going to make them feel warm and fuzzy, so it might give you a leg up between you and similar offers to know that, one, we've done a good job thoroughly pre-approving you, and two, they know I'm actively working with you, so when you put your offer in, they know we're going to be ready to go to get the loan in process right away. So I hope that all makes sense. Any questions you have, please reach out. Happy home hunting. I hope you find your dream home and get your offer accepted, and we'll certainly be in touch to get your loan in process right away. Thank you so much.